Hello, entrepreneurs. Joe DeCharis, CPA extraordinaire, coming to you live from downtown Bethpage, Long Island. Shutting off my phone. You would think that I'd know how to do that by now. Welcome to 2022. This is our first broadcast for the new year. It's January. I don't even know what month it is. That's why I'm all over the place. Tax season started early for me this year, earlier than ever, because we are anticipating an avalanche of new clients, new problems, new situations to solve for you, the entrepreneur, the business owner, the taxpayer, the person that has absolutely no idea what to do, where to go, how to fix it. You might still be looking for your tax refund. My aunt who worked at the IRS for 20 years, just got her 2020 tax refund last week. Yeah, that's right. Being transparent, I made a mistake on her return. I didn't check all the I's. I didn't cross all the T's. I didn't dot all the I's across all the T's. We missed a tax statement. Actually, she didn't give it to me. I'm not going to blame her. But she didn't give me a tax form. It wasn't included on her original return. And right away, February 23rd, 2021, we submitted an amended return, which they received. And we're waiting and waiting. Nothing. She's on the phone with them. Nothing. Uh, it'll be processed in the order that we received them. Blah blah blah. She actually contacted her congressperson, her congressman, and guess what? He got the royal runaround from the IRS. He finally got through to them, got through to the IRS, and they told him the same thing. Yeah, it'll be processed. It'll be processed. Then he nailed them down. He said, okay, the guy that's actually processing this, he got to talk to the guy that's actually going to look at the amended return. Now, mind you, all of the information, it wasn't like she had a business, there was outside information. Everything that is on her return is already reported to the IRS. We're talking about retirement plans, W 2s, interest statements, stuff that the IRS already has. So, how hard could it be? This is all computerized. So, all they got to do is say, hey, the information you submitted on your return matches what we have. Done deal. She gets her $6,000 refund. Okay, that money could come in handy. So lo and behold, the return is still not being processed. The congressman calls up. It turns out the guy that's supposed to do it is out on COVID. He got sick. Okay, don't you have somebody else that could do this? It's crazy. It's crazy, folks. Finally, instead of doing a direct deposit, which we asked, they sent her a check. They sent her a check in the mail, and I said, okay, deposit the check and let's make sure it clears. Let's make sure that the check clears. So we do have a couple of comments here. Let's see who. Hey, Tim, my friend, how are you? I hope you're feeling better. Uh, yeah. So Tim, yeah, you're absolutely right. The strategy. Let me tell you what the strategy is now. You need, and I've been saying this for months, and it's not uh, for my own self satisfaction. It's to help people deal with the IRS. This is a new and unimproved IRS, people, unimproved, and they had a lot to improve on. And instead of improving it, they decided to hire 85,000 collection agents. Uh, they tried this in the past, and it always backfires on them. But I'm not a politician. I'm not running for office. I'm gonna do what one of my VAs tells me is, let's play nice with them. Let's play nice with them because there's no benefit to arguing with them, fighting them. we have to find ways to work together because the employees at the IRS, they're not the problem. It's the people that make the laws are the problem. They make these laws and then they don't give them enough money to administer the laws. And that's why people don't get their refunds. It's not because the IRS employees are incompetent, okay, because they have been underfunded and understaffed for decades. For decades. The IRS has always had administrative problems. It's just more apparent now. And once COVID hit, it became a real big problem for millions and millions of people. So Tim, my friend, I hope you're getting over your second round of COVID. You know, I was shocked to find out that not only did you have to deal with it once, but twice. But you're a trooper. You're a survivor, and you're from Texas. So I had faith that you were going to come out of this stronger than ever. So the truth is, this is the strategy, folks. You got to be organized. Okay, you got to be organized regardless of what's going on with the IRS. You should be organized with your finances to begin with. You should know what's on your tax return and what you need to present to your tax preparer. Okay, and then you need to get it to them as early as possible. Okay, because especially if you do money, you want to get that return in early. Okay, people that filed later uh, had to wait a lot longer. Normally, if you get your tax return in now, next Tuesday, January 25th is actually the day where I'm doing another awesome free workshop. Here's the link to it. Uh, and what we're going to be talking about are these issues and really how to maximize your tax refund. Uh, it doesn't matter if you maximize it if you never see it, like my aunt. But we want to help you maximize your tax refund. There's a lot of new tax laws. There's a bunch of credits that you may or may not qualify for. The first thing is to know what's available. And listen, don't question your tax preparer. I love when my clients ask me questions, put me on the hot seat, ask me, why don't I get this? Well, and because I'm not always right. I think I made a mistake once or twice in my 40-year career. So I'm not 100%. I'm as close to it as you could possibly get. But ask your accountant, what else can I deduct? Can I get this tax credit? I had a great question from a client about he's got to hire somebody to watch his child. Okay, they just had a baby. Actually, his wife had the baby, and the baby's also his. But they want to know, they want to hire a nanny. Well, we came up with a way to legitimately pay the nanny through his business and take a business write-off. Now, he could pay her as a household employee and get a child tax credit. Now, there's three different child credits. There's your child credit, and Tim, this doesn't apply to you because you don't have a child, unless you want to claim Craig. But that's another story. But so you get a child credit, okay, and that's the whole thing with that advanced child credit, which is another thing that they flubbed, okay, because people are getting letters about how much advanced credit they got, and they're all wrong. And so that's one thing. So there's the child credit, there's the child and dependent care credit, okay, and then there's this child like daycare credit that you can get. Okay, so there's three different types of credits, and as long as you know which one you're going to get. So if it's a household employee, you can only get up to 20%. I think it's up to $600. Okay, so sometimes the deduction is worth more than the credit. So if you're on top of things, you'll know, do I want to take it as a business write-off or do I want to take it as a credit? So some people might say, well, how do I take my nanny as a business deduction? Well, the nanny isn't only watching the baby. Maybe the nanny's doing some admin work. Okay, they work from home. Okay, there's a lot of stuff that an assistant can be doing. One of them is making sure that the baby's diapers are changed. Okay, so how is it a Section 162 business expense? Well, if mommy or daddy can't do their job, they can't run their business. Uh, they're not making money. So is it ordinary and necessary? Yes, I say it is. And if somebody wants to challenge me on that, I'd be glad to talk to them about it. Some of these issues, some of these deductions are gray areas. And so let me tell you the worst place that you could find out about if something's deductible or not. The IRS publications and instructions, because that's what my client, and he's good. He did his research. He's like, according to the household employee publication on page 11, they state specifically that this is not a business deduction. Well, you know what? The IRS does not determine, believe it or not, what a business deduction is. When it comes down to it, it's based on the facts and circumstances of the individual taxpayer. Okay. You can't put everybody into a box. It's not black and white, folks. So that's the first thing that you have to understand. And I can prove it to you. If uh, you look, I think it's publication 562, Books and Records. I'm going to find out right now. Uh, books and this is how we do tax research, folks. We do it all on Google. Books and Records, IRS tax hub. And I'll get that for you in a second. It's publication 583. I was off. I was off by like 17. It's publication 583. If you look under the section where it describes how to keep your books and records, they give you a whole system, and they tell you this is you do this. You have sales receipts. They tell you how long you're supposed to keep them. Blah blah blah. And at the end, in the fine print, they say there is no prescribed method. There is no one fits all bookkeeping. It depends on the business's facts and circumstances. What you have to do is you have to make sure that your books and records clearly define, clearly represent what's on your tax return. Now, how do you do that? I go through this all the time with, I butt heads with other accountants, with lawyers that think that they know about auto expenses. They all claim that you gotta, well, not all of them, the ones that have actually handled tax audits know what the truth is. If you look at the IRS publication on how to document your auto expenses, they want you to take a picture of your odometer. Okay. Why? Is that the only way I could prove what my auto expenses are? Yeah, if you want to use the mileage way of doing it, I never use the standard mileage rate because you get cheated. You get cheated. What if you got to fix an engine? What if you're in New York and or California, you're paying astronomical prices for insurance? What if your car costs you $80,000? They got one rate for auto. So you're going to tell me it costs the same amount to drive a Toyota Corolla as it does to drive a Cadillac Escalade? There's no way. I'm taking the actual expenses. And I'll give you a couple of for instances, tax audits that I've handled. years ago, 30 years ago, before we had the internet, uh, computers were just starting. I remember when CDs came out, it was like an amazing technology. Anyway, so we had people that actually kept the auto logs. I had one guy who was an insurance salesman, and he documented every single mile. I mean, this guy had OCD when it came to keeping his records. He had how many miles it went, who did he meet, what did they talk about. So he was a successful insurance person. He met a lot of people. The firm, because I didn't do the return, I was working for a firm at that time. I was helping them with all of their clients that got audited and tax problems. And so the firm took 90% of his auto expense, the actual. So gas, uh, depreciation, repairs, we took 90%. And I don't remember what the amount was. Probably a lot because he drove a lot. Uh, I put everything on a spreadsheet. It came up with the calculation. He takes the, and I don't have one here. Oh, here it is. He takes the book. These are post-its. It's not, and he goes like this. I'll give you 40%. The look that I'm doing now is the same look. I was like, are you kidding me? We did everything according to the book. He goes, I don't care. I'm offering you 40%. Well, in those days, the way we handled audits like that, if we had a case, if we had the documentation, we would let the auditor finish his audit, and then we'd say, well, and the way it happens is they give you their proposed adjustments, and now you got an opportunity to agree or disagree. If you disagree, you can appeal. They don't like when you appeal because now somebody else higher up than them is going to look at their work papers and how they came up with their ridiculous assumptions. So I let him finish. I said, okay, you do your job and I'll do mine. He finishes his audit. He says, okay, this is what I proposed. And we go through it. Uh, and I said, well, 40%, we want 90%. And long story short, he gave us what we wanted because I said, either you're going to, this guy did everything the way he's supposed to. He shouldn't owe any money. Okay. Now, if he had unreported income, if he was trying to write off vacations that were obviously vacations, that's another story. But this guy just wanted to take whatever it was, whatever his reason was. So we got the 90%. So in going forward, taking that experience into my practice, I said, I'm not going to waste my time on everything that the IRS tells me to do. Okay, because obviously they don't follow their own rules. And here's the crux of the matter. And this is what I told my client. I said, don't go to the IRS website and their publications and take everything they say for granted. Okay, because the truth is the IRS is an administrative agency. Unless you're under investigation for fraud or money laundering, now you're in the criminal division. Now you're dealing with IRS agents that have a badge and a gun. I'm not talking about those types of problems. When it comes to determining whether or not something is a business write-off or not, or a charitable deduction or not, they're not the end all say all. Okay. That is why we have tax court. Okay. When people get audited, there's these different steps they have to go through. The IRS has to go through. They send you an audit letter. then even when the audit's done, you have time to appeal. Blah blah blah. It takes months, if not sometimes years. Okay, if you're depending on what the situation is. Uh, Once they come up with their final determination, you have 90 days to appeal to tax court. Well, what happens in tax? The IRS loses all the time in tax court. They only go, first of all, it's like a prosecutor. They're only going to prosecute the crimes that they know they're going to win at. So if you think about this, the cases that the IRS does not want to settle, that they let go to tax court, because sometimes you have somebody like Wesley Snipes, who it's obvious that the guy was trying to evade taxes. And if you don't know anything about Wesley Snipes tax problems, you can Google it. But if you think about this, so okay, they don't settle a lot of the cases. They go to court and they lose. And they lose. Why is that? Because they don't make up the rules. When it comes down to it, the judge is going to look at the facts and circumstances of each case. Okay? Like I said, there's the rules, but it's not always black and white. Okay, so that's my story, folks. I'm sticking with it. My plan tonight was to talk about urgent tax matters, but filing your return is as urgent as it can get. I can't stress this enough. I highly recommend that you come on Tuesday. If you sign up and you can't make it, you'll get a free replay. That's how we do it. We love when people show up and they interact with us. You'll get unlimited feedback. You get all the time that you want to ask questions. We play Jeopardy, and you have to be there. We have prizes, and you got to play to win. Okay. That's my story. I'm sticking with it. Joe DeCharis, CPA extraordinaire. Hope to see you on Tuesday. If not, I will see you again for another amazing episode of How to Win at Business. Thank you and good night.